Welcome to Be the Boss of Your Money. This is my live stream where we talk about investing, personal finance, and so many things that have to do with money so that you could be the boss of your money and not your money becoming the boss of you. Today is Tuesday. It's May 18th already. The month is flying by, but what's not flying are stocks. Stocks are definitely not flying. What a change of pace from earlier this year and from last year. We've got a couple things to talk about. We'll clear up a few things. We've got some weak housing starts numbers. We've got some good numbers out of Walmart and Home Depot, and we have to talk about what that means. And then we have to talk about some of the things that investors are waiting for to finally disappear or get behind us, right? Okay, so we're gonna have a good show today. We've got a lot to talk about, and I want to make sure that you have the knowledge that you need, the information you need, and the perspective you need. So we're going to start the show with a quick intro, and then we're going to get into the heart of the matter. Here goes. Okay, thank you for joining me, and it's good to see some people out there. If you have any questions, either about personal finance, investing, retirement investing, what have you, your Roth IRA questions, that sort of thing, go right ahead and ask me in the comments. I love hearing from you. Certainly, if you have any questions about today's content matter, I would love to answer your questions, and I hope I'm coming out to you loud and clear. And if you're watching this in the replay, welcome to you as well. Certainly any questions that you have, ask away in the comments. I will see those, and I'd love to have a shot to answer your questions, share some knowledge, drop some knowledge bombs, and that sort of thing. First thing we're going to do is we're going to do a quick review. It seems like a lot has changed over the last couple of years. I'm sorry. Let me start again. Seems like a lot of things have changed over the last couple of days, although that is certainly a truth. Okay. Thank you, whoever that LinkedIn user out there is. Yes, loud and clear. Thank you very much for tuning in and helping me out with my shot. Make sure the mic is in a good distance from my mouth. By the way, I'm using a Shure MV7 mic into a Mackie Pro FX mixer into an ATEM mini Blackmagic switcher, which hooks into my computer and my cameras. Camera 1, camera 2, and camera 3 are all hooked up into the system. All right, so a couple of things to go over. First of all, housing starts basically collapsed down way more than expected, just down almost 10%. Why? Because builders are saying that the cost of materials is so high right now that they have to raise prices, and it's just causing a slowdown in housing starts from builders. It's not necessarily a slowdown in demand. It's just that builders are having trouble sourcing materials, and they're paying exorbitant prices, and they basically have to change the mix of what they're building. Bigger luxury homes, maybe they have to build more of those as opposed to trying to build a lot more smaller, starter homes, that sort of thing. Mortgage rates are still pretty low. In fact, last week they, I think, hit all-time lows. They did. Walmart had a very good number, blowout numbers from Walmart and Home Depot. I mean, spectacular earnings and revenue growth. But, a lot of this is stimulus check driven. So people getting their stimulus checks, they mostly go to Walmart. They also go to Home Depot. But Walmart especially is very sensitive to stimulus checks. And the question is, how long does that last? And that brings us to the whole question about the stock market, why it's down. I'm thinking of the movie with Helen Hunt and Jack Nicklaus, As Good as It Gets. And maybe now is as good as it gets, because it looks like we have basically, if we haven't passed peak growth in the economy and earnings and revenues for companies specifically, not to say that we're not growing, just the rate of growth is slowing. So we're past the peak. If you Combine that with rising inflation, that's a pretty negative thing for companies and for the stock market as a whole. Because with inflation, if companies can't pass on the rising cost of their goods, of their inputs, then if they can't raise prices to consumers and companies have to eat those extra costs, those higher costs, it crushes corporate margins, profit margins. So earnings go down, which means PE ratios start to go down. So not only do you have a stock market with a basically historically above average PE ratio, so if the PE ratio goes down and earnings go down at the same time, you're talking about a rapid drop in stock prices. And we're actually seeing that. You might not be seeing it necessarily with the stock market averages, but you're seeing it with a lot of companies, which we're going to go into. But just to name a few, if you look at basically, if you look at any of the technology stocks, you really see it. Companies like Zoom, for example. Okay, just to name one, I just was looking at Shopify before because they announced a deal to help with Google, and but Shopify's gone from 1,900 and change to 1,300. That's a massive drop, especially for such a hot stock and popular stock like Shopify. So we're going to get into these things. We've got a couple of people out there, and I just want to say hello, Anthony. What's up, homie? You are my homie. Just so you know, Anthony, in about a half hour, I'm going to be rollerblading by Zack's Bay and the Jones Beach Theater. Okay, just to let you know, because I am still in the hood. You're not, but when you come back and visit us, we're going to do a little reacquaintance tour of Long Island. Good to see you, my friend, Anthony Ruffalo. Follow him on LinkedIn if you are not already. He's basically putting out the best content there is. Yes, basically anything in the ARK ETF, and we've been talking about that. Hey, bro, what's up? Josh is in the house. Thank you very much, Josh. You've been such a good supporter of the show. So we're talking about all this good stuff. Yep. Thanks for rubbing it in. Oh, come on. You got it pretty good. And I hope you're going to do one of those bicycle drops, when you go down the ski trails in the summer on a bicycle. That looks like a lot of fun. And Joe G is out there. Hello, Joe. Good to see you. Thank you very much for joining me. So let's just take a quick look at how the major averages did. We're going to look at crypto, and I want to play back something that I did last week about Elon Musk touting any investment. And this is when people get into trouble, just because, Elon Musk is brilliant, one of the wealthiest people in the world. I'm not knocking him. Well, I guess I kind of am. I don't think people with such a big megaphone should be touting any crypto, because I think people get into trouble. Not everybody can play at his level. Okay. Joe G has a question. Hi, Mitch. Do you suggest lump sum investing or dollar cost averaging? Okay. I love this question because I actually enjoy the personal finance more than anything. But so let me answer this. Hi, Mitch. Do you suggest lump sum investing or dollar cost averaging? You could do both, one or the other. So we want which one is better. I'm going to give you an answer that I don't think a lot of people are going to give you. The one that you could do now is the better answer. Studies that I've looked at have said lump sum investing over time has proven to be a little bit better return-wise. But not everybody could start lump sum investing. Most people, we invest monthly, we invest periodically, regularly into a 401k plan, what have you. You do the one that works best for your financial situation. Now, if you do have a large lump sum of money to invest, you've come into cash, you want to invest it, and you are worried about risk, about the stock market, about volatility, those sorts of things, that really speaks to your personal finance, such as your risk tolerance, your time horizon until your financial goals. Okay. So in that case, you might want to, let's say, dollar cost average a large lump sum of money into the stock market over, it could be a 6-month, 12-month, 18-month period. Again, this is what puts the personal into personal finance. make personal finance personal again. That should be my platform, right? So that's what I would say to you. You have to do the one that works best for you. If you are a truly long-term investor and you don't need the money for a very long time, 10 years or more, then I'm saying lump sum. Anything else, you're really just trying to time the market. And I think I'm right by saying history proves that market timing is a pretty tough thing to do. You'll feel like an idiot if you invest all your money now and the market plunges 30, 40% right after. But you'll also feel like an idiot if the market goes up 30 or 40% over the next couple of years. It's really tough to time this. So you just have to have the ability to say, I'm going to stick with it. I'm going to reinvest, and I'm not going to touch the money. If you can do that, lump sum is a great idea. Okay, so that's a personal preference thing. Zach, you are this is great. I'm loving this. Zach, nice to see you. Zach posts some great content on LinkedIn. So if you're not following Anthony and Zach, you should definitely follow them. I'm kind of jealous of you, Zach, because if I had to start all over in the business, I would want to work for Anthony. Yes, I would want to do that. Punishing, yes, but I would want to do that. Okay, so let's take a quick look at the market. Let's see how things close. I'm going to just pop myself up here in the screen. Hello, I'm up here in the corner. Okay. So the Dow just gave up the ghost. It wasn't having a great day all day, but at one point the Dow was down about 50. The NASDAQ was up about 50, and the S&P was about flat, maybe off a point or two. It was just a very flat day. And I like these flat days. It kind of lets the stock market catch its breath, lets investors catch their breath, their collective breath. And then we pick a direction. But I don't like big up days after big down days, because those big up days, they get repealed pretty quickly, and they don't really tell you anything except for reinforce volatility and scare people out of it. But the Dow still slightly above 34,000. The NASDAQ just keeps getting beaten down to 13,300, down 75. S&P down 35. Gold up a touch. Oil, it's still mid-60s. No one can say anything bad about that. Bonds are unchanged. I'll skip the euro US dollar benchmark right now, but it's been pretty steady. But the VIX, this is the thing. See the VIX here? That's the volatility index, the fear gauge. This is basically a measure of when professional investors like hedge funds get nervous about the market. They pay up for derivatives to hedge their portfolios. This was flat all day, and it was exactly unchanged at one point. And you never see the VIX unchanged or flat. And I'm like, wow, that's a really flat day. Sure enough, by about 3:45 p.m. Eastern time, the VIX shot up 8%. And all hell broke loose. So what I've been saying is, if we could see the VIX get back under 20, I think we go into a calmer market. VIX stays over 20, continued volatility. If the VIX hits 25, we've got another big leg down, is my opinion, is what I think. Let's take a look at crypto. So Bitcoin down another $859, down to 43,000. Quite a ways lower since Elon Musk got into it. Let's take a look at the crypto that everybody likes to talk about. Doge. Did I pass it? Doge, where are you? I know it's in here somewhere. I just looked at it. Here it is. Okay. Doge down to 47 cents. It was 69 cents at its peak. And then Musk went on SNL, Saturday Night Live. So I just want to show you something. I thought, you are too kind. Well, you know what? You're very welcome, man, and you certainly deserve it. So I want to just show you guys something that I put out a couple of days ago, and just tell me what you think. This is just going to be like a minute. Watch this really quick clip. This is my opinion of what happened with Dogecoin and Elon Musk. So you see very famous, well-known people like Elon Musk, for example. Hold on. Can you guys hear that? Something got messed with my volume on videos, and I should have restarted my computer before I did this. So let me know if you can hear it, okay? Did you hear it? Let me know in the comments. When you see very famous, well-known people like Elon Musk, for example, I think he's a superstar. But when he touts something like a Dogecoin, you don't know who's listening. You don't know the risk tolerance of the people who are listening to you. And somebody might do something that's way too risky for them, for their risk tolerance. Now, I know what you're saying. Well, these are adults. They could make their own decision if they want to buy or sell a speculative thing. I don't even know if you want to call Dogecoin an investment, because there's nothing about it that makes it an investment. The only thing that's attractive about it is it's going up. So other people see it going up. So the other people see it going up. They want in on that action. So they buy it. There's something called the greater fool theory, which means it's just selling something to the next person who thinks it'll go higher because they think they could sell to the next person because they think it's going higher. That's what makes it so speculative until you get to that last marginal dollar, and then somebody doesn't want to buy it, and all of a sudden it goes back down. What makes something an investment? If it has utility, if it generates cash flow, if it solves a problem for consumers, that's what an investment is all about. All right. Thank you guys for letting me know you could hear it, by the way. So what do you guys think of that? I mean, I know we're all adults, and people who presumably buy Bitcoin or anything else, they're adults. But I know as a financial advisor, and you guys know whether if you're a financial advisor or not, you probably, or if you know financial advisors, you know that we really can't make, we can't make specific recommendations in the public forum. We have a responsibility to know the risk tolerance, financial goals, time horizon, et cetera, of the people that we're speaking to. Is there a responsibility for people with a giant megaphone like Elon Musk to be careful when they talk about Bitcoin or Doge, or is he just really enjoying his time in the spotlight and he wants to be one of the kids? I don't know. So I think I have a problem with that. Okay, so let's go back to the screen share. Okay, I'm back here. All my watch lists, I'll make this a little bit smaller so you could see the whole thing. Okay, I mean, almost everything across the board tanked. Financials tanked, and a lot of people worry that financials are starting to roll over, which would be a shame because that's one of the groups that's been holding things up and leading the market higher. Technology hit the skids. But if you notice, one of the stocks we spoke about, DocuSign, was up. We spoke about that stock yesterday. While you're looking at a blank screen, there it goes. DocuSign had a nice update. What I spoke about yesterday, I don't know if you guys caught the show, but here's the thumbnail from yesterday's show. This was, could these stay-at-home stocks, could these stay-at-home tech stocks recover? DoorDash, Netflix, Zoom, DocuSign, and Peloton. So we were speaking about these stocks yesterday, and those are like the really popular, really popular tech stocks, the ones that enabled us to stay at home. And we could add in others, but I think those exemplify that group. And of those, the one that I think could continue to show growth without moderating like the others is DocuSign, because there are so many businesses that are migrating to DocuSign, and I think that's got a long runway. I'm talking about the growth of earnings and revenues, not, again, specifically about the stock. Just want to be careful out there. And so that's that. And if you guys, let's just take a quick look at the FANG stocks. I always look at these stocks. The Fangaroos. Did I say the Fangaroos? It's kind of what you do when you're trying to fill up airtime because you're not, showing the screen. But now I'm showing the screen. Okay. So Netflix, Microsoft, Apple, all these stocks are down. Google, Amazon, Facebook. These are the six horsemen of the S&P. When these are all down in one day, it's almost impossible for, the S&P 500 to fight that. Okay, and if you look at these lines here, the green and the red, the right side of the red lines over here, this is the year highs. So you could see that little by little, these stocks are getting further and further below their all-time highs. That's concerning because these stocks have had to do a lot of heavy lifting in the market, and now they're not. And if the smaller second-tier stocks, which are not in the S&P 500, which is an index, you can't invest directly into an index, but you could invest in a security that tracks or mimics an index. Thank you. If you see the smaller stocks starting to crumble like the Zooms of the world, the DocuSigns, the Teledocs, Pelotons, Shopify. Typically, you know, what happened in the year 2000 is the smaller stocks started to crumble first, but the largest tech stocks kept going up because the smaller stocks were a source of funds for the tech stocks. And people would say, well, I'll be safe in WorldCom and Lucent and Enron. WorldCom and Enron were scams. Lucent went from like $103 to $1. All hell broke loose and the NASDAQ went down 80%. I'm not saying the NASDAQ's going down 80%, but you could see that the selling pressure in the second tier tech stocks is starting to spread to the first tier tech stocks. And I do think that is a concern. Now, just a little bit of housekeeping, by the way, since we're all one big family. You can watch my live stream. You can connect with me on LinkedIn, on my Facebook business page, Client First Strategy. Of course, if you know me, you can hit me up on Facebook personal as well. A lot of people do. YouTube channel, Client First Strategy on YouTube. You see that, okay? On Instagram, I am at InstaMitchG, okay? So InstaMitchG, if you could see that. And on Twitter, I'm at Mitch_Goldberg. All right, so this week is flying by. That's basically it for the day. I just wanted to talk to you about a couple of things that investors are waiting for. We're waiting to see if inflation is persistent. And even if inflation isn't persistent for a year or two, if it's enough to hurt corporate earnings or consumers, and we're past peak accelerating growth in the economy, that is going to keep a lid on stocks. And I think that's the overarching theme of why stocks rally. And by the end of the day, the rally fades and nothing could get out of its own way. All right. Have a great day, everyone. And I will see if there's anybody else out there. Okay. We've answered all the questions. I'll be back tomorrow. Thank you.